Hello, how's it going everyone? Today I'm going to talk about the most undervalued stock in the market right now. If this is your first time in my channel, please like and subscribe and make sure to turn on your notifications. And today I'm going to talk about the cheapest stock that in the market right now to buy, because the market been crashed lately and there's so many stocks that crashed down 60, 70, 80%. But not all of it are undervalued. But not all of it is the cheap stock. Maybe some of the stock that even down 60, 70% and they still overvalue. But today, this video gonna find you for the undervalued stock, that the cheapest stock that to buy right now to hold it for long term, for your long-term investment. So the first one would be Palantir, PLTR. Let's look at the technical analysis real quick right here. So Palantir was IPO back in 2020. Its all-time high was at $45. Right now, it's going on the downtrend. Last week, Palantir touched $10, okay? So this stock was one of the popular stock last year. And right now, the market cap is still sitting at $22 billion. Based on the technical analysis, it broke $11, its support level. So the next support level that we're going to see is $10, okay? $10 is the price that they went IPO. And in the short term, if this stock break through $10, it might go down a little bit further to single digits. In the long run, this company is going to have a lot of potentials. So what this company does, Palantir is pretty much a technology company, a software platform that assists investigations and operations for the government. And let's take a look at their financial numbers on Q4 result, okay? So after the earnings release, the market take another hit on Palantir. But their financials still looking pretty strong. On their total revenue growth is 34%. On the government revenues grow 26%. On the commercial revenue growth is 47%. And the US commercial grow at 132%. And the adjusted operating income is $124 billion. And their adjusted cash flow is $104 million. So their number is still looking very solid. The second one is SOFI. SOFI was one of the SPAC that was very popular SPAC. And now it's back to $11. Its all-time high is almost hit $30. And this stock right now is sitting at almost $10 billion. It's a financial service stock, and this company is also pretty solid. When you look at the chart right here, you have the head and shoulder, and right now the stock is trying to hold $11. It's almost the same situation as Palantir. $10 is very strong support, okay? In the long run, this stock has a lot of potentials, especially on the business that they do in the financial services. Okay, let's look at their quarterly performance on the revenue side. The adjusted net revenues of $277 million, which is 28% of year-to-year growth. So this is a very solid growth number for revenue. So their EBITDA is of $37 million. And they used to have a negative EBITDA now, but now they have a positive of EBITDA of $37 billion. So they are operating in the positive cash flow. This is good side. This is definitely a good side. And also when you look at the result and guidance for Q3 2021, they actually beat their guidance for $22 to $32 million, which is 8 to 13% beat their guidance for revenue. So SoFi right now sitting at $11 is definitely undervalued based on the operation and financial performance, and based on the chart right now, that it might not be the bottom. Actually, right now at this price in the long term could be 2x or even 3x. Number 3, which is ChargePoint. So ChargePoint also was a SPAC before, also was one of the very popular SPAC, especially in the EV charging sector. So right now, as you guys know, every single automobiles companies that they are going to EV, even Toyota, Ford, GM, all those auto companies gonna push out EV cars, right? Tesla is one of the biggest automakers, right? All those like small makers for EV are coming out. So ChargePoint is one of the largest EV charging company in the US. It covers majority of the charging company in the US. So it's one of the best EV charging company. In the future, the EV car demand is going up, but they need charging stations, right? So ChargePoint would have a lot of potentials. As long as the EV industry goes up, the charging station demand is going to go up. And ChargePoint is going to go up like with the EV car industry, right? So when you look at the chart, ChargePoint came out as a SPAC and it went all the way to $50. Now back down to $13. Right now, market cap at $4.5 billion. So when you look at this chart right here, the ChargePoint is growing in North America and is expanding in Europe. So there's 160,000 activated ports, and there's also 11,000 activated port DCs. It covers majority of the North America and the European market, right? It covers majority of the North America and the European market, as you can see. Q3 2021 is 36 million. Q4 2021 is 42 million. And next year, they are forecasting about 40 to 60 million per quarter. So their revenue actually increasing almost double compared to 2020. So also looking at their balance sheet. So companies like this, they need a lot of cash to sustain their operation, right? ChargePoint is a fast-growing company. It needs a lot of cash to operate. If you like Tesla, you gotta like ChargePoint. ChargePoint is just like Tesla, but in the EV charging sector. You know, when you see Teslas going up, ChargePoint gotta be going up because Teslas also need charging stations, right? All the EV company is gonna need charging stations. The last one would be AI. Its all-time high was $180 and now back down to $21, and its market cap right now is sitting at $2 billion. As you guys all know, AI is going to be the future. There's a lot of jobs out there that's going to be replaced by AI. You know, especially manual laborers, like especially the jobs that you have to do it again and again, and AI can do it better. When you see the future of AI, this company is one of the best AI company that just IPO not too long ago. It actually down about 80-something% from its all-time high. And let's look at their number, and their Q2 revenues, $58 million, increased 41% year over year. Their revenue is actually growing, and their revenue guidance raised 35 to 37% growth, and it's up 17%, you know, from year to year. You know, like I say, this company is a fast growing company. It's an AI company. AI is the future, guys, you know, and put this on your watch list. So today I talk about this 4 most undervalued stock, the cheapest stock right now in the market at this current price and this current market condition, and do your own due diligence and put this on your watch list. And I think this 4 stock in the long run, it's gonna have a lot of potential. And I hope this video helped you guys to find some undervalued stock. And this is not financial advice, but if you like this video, please give me a like and subscribe and turn on your notifications. Thank you.